Hello again. Despite clear signals from the Fed about what they're planning to do, the equity markets have been lacking in direction recently. So what's the reason for this? Well, I've been speaking to Mike van Dulken from Accendo Markets. Mike, we've had some pretty firm indications from the Fed where they're going to go, from Fisher, from Yellen. The equity markets don't really seem to know what to make of it. There's still no real direction in either way. Why is that?
I think recently, as we were discussing earlier, the dollar really sold down recently because of the questionable macro data, which had people putting off their expectations of an imminent rate rise. And then very quickly, we've had almost the reverse come about, with decent data coming in the form of inflation last week, and then questions over whether growth data had been actually underestimated. So now we've got more fairly, as you say, clear comments from Yellen that it will be, we are about to do this. In my view, whether it comes in Q4 or Q1 makes very little difference. It's going to happen. That should be priced into the market. The timing, give or take a few quarters, shouldn't lead to as much volatility, in my view, as it already is. Because what is very clear and what is more important is that the trajectory of rises thereafter will have to be slow. We're coming off a multi-year base. What are we, 6 or 7 years, if not more? The adjustment to the new normal will have to be very gentle, so as not to spook markets any more than they're kind of prepared to do so. Hence the volatility we can see right now. Yeah,
it's quite interesting for equity markets, isn't it? Because you would say that the S&P, for example, should be an indication of how the US economy is performing. But at the same time, we have this extra liquidity injected from the Fed still in the system. So as we progress with a Fed hike, then the idea that liquidity might be improved, do you think that's going to limit any potential upside there?
I think right now what's really hindering is that stronger dollar. As you say, the S&P is going to be a better reflection of US corp, if you like, but as exporters, that's going to be troublesome for them for selling their wares abroad. We've been seeing the counter benefit over here in Europe, with the DAX trading. I think year to date we must be up nigh on 20%, which is 15 percentage points clear of its global rivals, thanks to the launch of QE and that weaker euro benefiting all those exporting names in Germany.
Why isn't the FTSE performing stronger then? Because we've had one of the big uncertain factors we had was the UK election. I know the FTSE is a global index, but now that uncertainty is withdrawn, FTSE is still pretty unspectacular. Again,
unfortunately, stronger dollar. Commodities. Don't forget how much of the FTSE is made up of commodities-heavy names who are hindered. Again, the price of their underlying products are based in dollars, so that stronger dollar is hurting. As well as so the election's out of the way. Do we have lingering worries about a referendum, secession with Scotland? Now you've got such success with the S&P after the election. But yeah, the FTSE's always been one that has been hindered. Hence why we only just got to all-time highs recently, and we've not been able to do much better since. It may well be that is the case for the rest of this year. I think our forecasts for most people were a little bit too bullish for the FTSE for this year. Whether it can get to kind of 7,500 is probably a tricky one to, given that we are heading for a rate rise. The dollar is going to strengthen. It is going to hurt commodities. That is going to hurt so much of the FTSE.
Yeah, let's finish off by looking at Europe and Greece in particular. I don't think there's any point in me asking a specific question. Just what is your reading of the situation as we stand at the moment?
I mean, as chaotic as usual, unfortunately. We're back down to, we're not quite down to the wire, but what are we, maybe 10 days until these, which appear to be self-imposed deadlines. I think they are pretty clear. Is it the 2nd or the 5th of June is the IMF deadline for paying that money. And you've got Greece, which is kind of running around proposing this, that and the other. Unfortunately, this afternoon we've had things proposed and immediately vetoed by the same ministry. And indeed, the creditors are meeting again. They're not happy with what's being proposed. I'm fairly confident something will be cobbled together in the end, as has always been the case. But how many times can this keep happening? That does have to be asked, that question. And at what point does it become beneficial that Greece actually just does say that, hey, we can't do it. We're better off out. out of either the union or the single currency, to give them some kind of competitive benefit to revive the recovery, which had been going okay, but it's come back and it's in back in another very perilous position, which is very unfortunate for both it and the Eurozone. And as we've seen over the weekend with the elections in Spain and the reaction in Spain and Italy, that does bring back to question the situation in Club Med. I know bond yields for those countries aren't quite as bad as in Greece, and Greece's in fact aren't as bad as they have been in the past, but the situation could well rear its ugly head again very easily. Yeah,
let's just finish with some specific levels, some tradable advice for traders out there. The FTSE is interesting because, as you said, it's got that commodity issue, and also we've got OPEC coming up, which could hit the oil producers as well. What do you think are the interesting sectors going forward over the next week or so, or couple of weeks?
Well, I mean, the FTSE right now, we've just broken below the trend line of rising lows from May. And I believe this afternoon the bounce has seen that previous support, turn to resistance. So we've got a hurdle now at, I think it's 7,030 thereabouts, which needs to be beaten. But we've also come back from the trend line of falling highs from April, which we never really tested. So we've got two hurdles to overcome if we're to even entertain the thought of re-seeing highs. You've got the commodities are kind of under the cosh, although they are at interesting levels, so there is potential for them to see a decent bounce. And I think the financials are having a bit of a hard time, but again, some of them have given up some Lloyd's has come off multi-year highs, but it hasn't given up too much. I think there's still interest there in that story. Barclays had a bit of a hit from the settling with the regulators. Seems to have kind of, that's water under the bridge now, although what's next in terms of scandal, that does beg the question with the rest of its peers. And then as you say, the oilies, big influence. I think Shell is the biggest influencer today. BP's up there as well. Oil is trading down on the stronger dollar, but any clues from OPEC as to the direction of oil price or where they would like to usher it could well be could give an impetus to those names and have a knock onto the index.
Well, thank you, Mike, for his analysis. Stay tuned for more London Direct, but for now, goodbye.